Hi there, welcome to another edition of Freeworld Heads Up. This time we're recording on Friday the 2nd of September, so it's a pre-weekend one. Myself and Sanjoy with you, and what are we seeing in the currency this week, Sanjoy?
Well, it's been a relatively exciting week. I think, we've been looking for the bounce back from sterling, and we've had this period where we started seeing post-Brexit figures. We've had the initial sort of there was some better than expected figures which were kind of taken with a pinch of salt. There was a feeling that we hadn't seen the bad news yet. This is always the situation. But earlier on in the week we had some very good UK PMI manufacturing figures. These are figures which really cover what people are buying, the purchasing managers are buying to make stuff with, whatever that is, and how are they spending more money? Are they spending more money on machines, etc., etc. These figures are all very good and implied actually a sort of quite a sharp recovery from where they'd been immediately around Brexit. And there's quite a few indications. Now, we discussed, I think, the previous week about spending, especially tourist spending. Now we're seeing some figures suggesting that manufacturers are getting more orders. It's undoubtedly the case. There's also the negative side, which is that the costs are going up because, we don't actually have much stuff to make things, which we have to buy it all in.
Sure.
The fundamentals are still pretty weak. Price of oil is about $45-46 a barrel. But these figures were really taken on board, and sterling went up to about 132.50. Today we had the change in non-farm payroll figure. That's American figure, really reflecting the sort of vigor in the non-farm, i.e. non-seasonal office-related jobs, etc. And the importance of this number, it's always a big number. It's one that people look at for the health of the American economy.
Okay.
And the backdrop of this, of course, is that we've been expecting is basically whether there'll be an interest rate rise in America in September. And that's been sort of coming and going to the foreground. Last moves with some very bullish language from the Fed, which made a lot of people think that maybe this rate will come in the September meeting. And the figure when it came out was forecast at 180. People weren't expecting such a good figure as the previous one, which was 275, which is a monster. Number came out about half an hour ago, and it was 151, which was seen as very negative.
Right.
And as a result, both sterling and the euro improved against the dollar. The dollar weakened. And currently we're looking at about 133.30 for sterling, 111.97 for euro, and an actually improved euro GBR figure of 1.1905. If you're an optimist, you can glean quite a lot of feeding material here, because firstly, when the improvement came versus the dollar, we seem to have taken more of it, sterling, than compared to the euro. The euro has been starting to look a little bit on the back foot. There's a referendum coming up in October in Italy. This is actually about some constitutional anomalies in the Italian constitution, which, if you like, their equivalent in English of the House of Lords and their equivalent to the House of Commons are very equal, and actually both have the power to veto any legislation, as a result of which any incoming government in the last decade, where we've had quite a few problems, has had its hands tied. Current ruling party wants to change this so he can make some changes, and it also has the president said basically if he doesn't get this, he's resigning and his party is going to resign. There'll be a general election, all of which makes an excellent feeding frenzy for the angry votes, the protest vote, the anti-expert vote, whatever it is. And we feel that, or analysts feel that there is a negative effect on Euroland of Brexit, and that is not so much a direct, nothing to do particularly with trade balances with the UK or anything like this. It's to do with the contagion of the anti-EC, anti-neoliberal view. This neoliberal word is quite interesting. It's about when instead of just being happy with people doing what they're doing, you become increasingly proscriptive in telling people what they can't or can't do.
Right.
Right.
People
but
love
in a liberal way.
People
be really
love being told what to do.
Yeah. Yeah, that's right. And this does get the sort of shackles up, and it does get the protest vote going. And we're seeing something like a protest vote in America, or the build-up, what could be, lead to Donald Trump being president. And we may get the same thing in Italy. And it's this sort of fragmentation that that might represent the real political risk that comes post-Brexit to the EC. And there's little things like the way that the euro hasn't taken as much benefit from this weak American figure does suggest that people are getting a little bit nervous about the euro, whilst it seems to be slightly different now for sterling. People are saying glass half full than glass half empty. So maybe we're at the bottom of these kinds of things. Of course, nobody knows, particularly me. So here's more stuff that I don't know much about, like the hazel market.
Yes, so hazel market seems to be kind of in a state of flux, as we've talked about over the last couple of weeks. More material is now collected. They reckon about 60% of the total crop is now harvested and in farmers' stores. But there it stays. They're not bringing it to market, and the price is still stagnant at around levels that we've seen the last couple of weeks. So hazelnut market, although it's threatening to come down, farmers are distinctly opposed to that. The government line remains: don't sell your hazelnuts. You can get more money for your hazelnuts. Keep your hazelnuts in store, and the higher prices will come when the likes of Ferrero and other large manufacturers need to buy the stock. So two very opposing trains of thought as to where the market's going to go, but at the moment it's not going anywhere.
Not going anywhere. All right. Okay. Well, partly one of the reasons that we're filming this on Friday is that on very early on Monday morning, myself, Ishan and Elsa are going to Bolivia. This trip has been planned for a long time, and there's more to do about what's called field to fork kind of ideas, trying to be specific as to where some products are coming from. We're getting now, as far as the current market is concerned, we're in a situation where we've got the people have their orders. The factories are working pretty full tilt in Bolivia to get the last couple of months of hot season exports out. They're not therefore looking too far into the future, and whilst demand, has to be said, is not a growing vibrant thing. It's more like an old lady who needs to sit down every now and then. And most of the inquiries we're getting now for next calendar year. So we're going over there, and I won't be around for the next header. We're away for about 10 days, and we'll come back and give you some idea of how many there are left. That's the main question.
Yeah, so stay tuned for news in the Brazils in the next couple of weeks. So
Okay.
good luck on that trip, Sanjoy.
Thank
and
you.
We'll see you when you're back.
Okay.
Thank you.